Good morning. A warm welcome to you. Sage here for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some of the key highlights and happenings from yesterday. Starting with the US market. A semblance of calm returned to the world markets on Monday as investors waited for more details to assess the severity of the Omicron coronavirus variant on the world economy, allowing battered stocks and oil prices to rebound. And the global stocks rallied, oil prices bounced and safe haven bonds lost ground as markets latched onto hopes the new variant of concern would prove milder than initially feared. MSCI's gauge of stocks across the globe advanced 0.67%. And the benchmark US indices closed higher on Monday, 29th November, after the major stock segments saw gains amid soaring oil prices and fading concerns around the Omicron variant of COVID-19. The S&P 500 climbed 1.32%, the Dow Jones was up 0.68%, and the Nasdaq Composite rose 1.88%. The small-cap Russell 2000 fell, however, 0.24%. Investors seemed less worried about the Omicron threat as the stock and oil prices surged. However, on Friday, markets reacted with caution as the news of a new variant emerged from South Africa. As markets waited with bated breath about the virus's transmissibility, President Joe Biden announced on Monday that it was not a cause for panic. Meanwhile, Israel and Japan said they are temporarily banning foreign travellers from entering the country. Healthcare and technology stocks were the biggest gainers on Monday, and all the 11 stock segments on the S&P 500 index closed in the positive territory. Technology, consumer discretionary and real estate stocks were among the top gainers. Industrials, financials and consumer staple stocks also saw notable gains. And now it's time for another small break. Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine. Welcome back, Sage here. You're watching the Global Markets Roundup show by Kalkine TV. And the European shares rose on Monday after their worst sell-off in more than a year as investors awaited the clues on whether the Omicron variant of coronavirus would hamper economic recoveries and monetary tightening plans by central banks. And the Pan-European Stoxx 600 ended up 0.7%, logging its best day in a month and recovering some of Friday's 3.7% slump triggered by concerns around the newly discovered variant. The London shares staged a meaningful comeback in a session on Monday, with the domestic benchmark FTSE 100 retaking the psychological level of 7,100. And the index paired the gains in the terminal trades. The index registered an intraday peak of 7,161.91. And meanwhile, the consumer credit in the UK jumped by £0.706 billion in October, as Britain's borrowed £0.6 billion in the form of credit card debt. And this has been the strongest net borrowing since July 2020. Now, according to the Bank of England data, the individual borrowing, including the personal loans and car finances, translated into £0.1 billion of net lending in the corresponding period. And the headline FTSE 100 gained 0.94%. The mid-cap heavy index FTSE 250 advanced on similar lines, with the market index rising 0.97%. Japanese shares tumbled on Monday, with the Nikkei average sliding to its lowest level in 1.5 months, hit by worries about the damage of the Omicron coronavirus variant. And the Nikkei lost 1.63%, a low last seen on October 13th, after sliding 2.5% on Friday. Chinese stocks closed down on Monday as concerns lingered about the newly discovered and possibly vaccine-resistant coronavirus variant, while analysts anticipated limited impacts on China's A shares. The blue-chip CSI 300 index fell 0.2%, while the Shanghai Composite Index was flat. And South Korean shares closed at their lowest in nearly 2 months on Monday as worries about the Omicron coronavirus variant and its impact on the global economy sparked a sell-off, and the benchmark Kospi ended down 0.92%, the lowest close since October 6th. It tumbled as much as 1.55% in the early trade to hit its lowest levels since January 4th. Let's move on now to the Australian market. The ASX 200 fell 0.54% on Monday and the global stocks surged. Oil prices bounded and bonds lost ground as investors and traders stuck onto hopes that the vaccine-resistant newly discovered variant would have lesser of an impact than earlier feared. It had happened after a top South African infectious disease expert said that existing COVID-19 vaccines are probably effective at preventing severe disease and hospitalisation. And let's take a look across the commodities market, starting with the bond prices. And the 2-year yield for the US stood at 0.51%, while for Australia it was at 0.60%. And the 5-year yields for the US stood at 1.18%, while for Australia it stood at 1.32%. And the 10-year yield for US stood at 1.53%, while for Australia it stood at 1.74%. And for Germany it stood at negative 0.32%. The dollar index rose 0.07%, with the euro down 0.32%. And traders bought oil on the hope that Friday's sell-off was an overreaction to Omicron. On Friday, the oil prices fell more than 10% in their biggest one-day drop since April 2020. And speculation that oil-producing group OPEC and its allies, known as OPEC Plus, may pause an output increase in response to the spread of Omicron aided the oil price rebound. Brent futures settled at US $73.44 per barrel, up 1%, and WTI crude futures settled at US $69.95 per barrel, up 2.6%. And the gold prices fell as improving investor sentiment put pressure on the safe haven asset. The US gold futures settled 0.2% lower at US $1,782.30. The steel futures in China traded in a tight range on Monday, weighed by demand fears due to the new Omicron coronavirus variant, and the benchmark iron ore futures rose 4.8% to reach 615 yuan a tonne, giving up some of its 6.1% surge earlier. Thanks for your company on today's report. That's all for now, and keep watching Kalkine TV for more of the market updates. Sage here, signing off for now.